recognizing that the commercials are now ready to go? How do we recognize when a commercial is ready to go, guys? Toxic. Toxic. So a commercial accumulation, the problem with recognizing just the commercial accumulation is this idea here. How many times is it going to go down? Is it going to go 3 times? Is it going to go 2? Is it going to go 1? Is it going to go 5? Is it going to go 6? Is it going to go 7? Is it going to go 8? So we can start recognizing all of these types of narratives in here. And, you know, we don't know exactly where that commercial is going to start marking up because there might still be enough selling. But what is it we do start recognizing when it's going to start marking up? Well, what do you do as a market maker if you start seeing a commercial paying across the spreads? What do? You pull away the price, and it creates a toxic order flow. So in other words, into the low price, what does it look like? Oopsies. Into the low price, it looks a little bit like, maybe looks a little bit like this. The price is coming down into the low prices. And when it hits into the low price, perhaps we get an extension of the trend at that stage. When it hits the low price, and the dealers are looking at that saying there's no sellers in this now, what happens next? That type of thing happens. Then the price pauses. And then we see the idea of the accumulation maybe taking place again in here, right? Maybe it doesn't go all the way down halfway here. Maybe it doesn't go anywhere near that type of trade. But what happens next? Well, a lot of the times you'll see this type of thing happening here. That's the toxic order flow starting to show up on a market, right? That's the idea of toxic order flow, is these fast money moves off of these accumulation levels. If it's slow money moves, the market maker's still involved. They're still connected to two-way money. If the market maker pulls away the liquidity the way the market maker should, the prices are ready for marking up. Now, if you understand that, your job is to see this toxic order flow for the first time here and say, you know what, I've now got toxic order flow. The market makers are now marking up the price. The dealers are pulling away the liquidity. The commercials are now crossing spreads. If I can get a pullback into this half-back trade area here, I want to take advantage of that, right? That fast money, slow money narrative is incredibly valuable as an order flow trader. So the question I've got for you is it visible on gold? You might see the accumulation dead easy because you'll see the 1, 2, 3 accumulation, but when does that become a very easy buy trade as a retail trader? When you see the toxic order flow coming in behind the accumulation. And that's obviously just about patience. Let's see if you can spot the toxic order flow coming in behind the accumulation. Is the toxic order flow visible that comes in behind the accumulation, yes or no? There's 3, 4 good examples of toxic order flow inside that accumulation. 4 good examples. The first good example of toxic order flow that came in during the accumulation phase here is probably this breaker north out of this area here. So there was the first toxic order flow trader right there. Everybody agree with that one? Fast money break north, beautiful. So when you see the slow break south, you can start saying, well, I'm going to start watching for buyers coming back into this half-back trade area here. And sure enough, we get another toxic buyer coming in at that stage. Still a failed auction. And you wait for the slow grind. You start seeing this accumulation phase again as we run into the stops. We can see the accumulation again here. We can see the accumulation again here. We can see the accumulation again here. And then we get this another toxic order flow phase of the markets. We've got a cap or top edge. We've got a toxic order flow bottom edge here. We know the half-back trade takes place in here. We can start seeing that accumulation taking place at lower lows as we go through that process. You see that accumulation restarting. Another toxic candle here. Another half-back trade here. There's the toxic candle again, driving the price away from the 50 line. The pull back into the spring trade here. And then boom, the gold price is gone at that stage. Look at that, guys. It's all one trade. It's not many trades in here. It's one trade. That storyline is one single play, isn't it? And you can see that whatever took place in here, it was visible from the toxic order flow narrative. And if you recognize toxic order flow, if it's a requirement for you to get business done, you can obviously be more patient with your trading. If I get toxic order flow, I'm going to sell a pullback. If I get toxic order flow buying, I'm going to buy a pullback. I'm going to start looking for that pullback storyline to deal. Because toxic order flow is real money commercial trading. It's not the thought that it might be when you're looking at things like the book liquidity. The book liquidity might be real money selling, but it might be also a spoof type trade. Toxic order flow is real. It's already traded. You're not having to make this shit up. You can see it live on the charts. In fact, so much so you can see even in the background at the overnight session, there was some toxic order flow you could probably have recognized quite easily. You can see it just in here. You can see that there is an accumulation seemingly to accumulate into these lower prices. You can see it, but you don't know where it's going to take you until you start seeing this very toxic breakout of this area. When you see that toxic breakout, you're going to start watching for a half-back trade opportunity to buy back into that storyline, and that's the safe trade here. And the trade goes beautifully off that toxic buy reversal from the low print. So you don't have to try and guess about these bottom edges, do you? You don't have to try and guess about where the bottom edge is. You can just wait for the toxic flow to show up and then deal on the pullback phase. By doing that, you can start to recognize how easy it is to trade some of these retail trade areas when you start seeing some fast money breaks. Now, you might argue, but this was a fast money break. I would have thought this was toxic. Okay, so if you traded it as toxic, you would say, well, there's the accumulation. There's the toxic order flow, so there's my buy trade on the halfback. And obviously it doesn't trade out. It doesn't trade out, so it just trades through. You still make some money, scratch out the deal. A toxic seller comes in and pushes the price clean through, and you start all over again. You start all over again. You start the process. Maybe a toxic buyer shows up here. You say, that looks toxic. Pullback trade. You say, right, I'm buying it. Okay, another top edge. We didn't trade through the level. We didn't trade through, so that's not ready yet. Toxic order flow should always trade through the level in the next move. In this case, it obviously means that we're going to have to go back down into these lows again to try and get more liquidity. Well, that's not a surprise because of the time of the day. It's only 6 o'clock in the morning. So we know that we need to take the price lower to get size. They take the price lower to get size. Accumulation trades taking place in these phases here. And then the toxic order flow shows up in this little candle here, shows up again here, shows up again through the top edges. The top edge gets put in here. We get the 50 pullback trade area here. Perfect opportunity to buy against that spring trade. And then we can start to see we did take out the swing highs at this stage. So we're ready to go, we're ready to go, we're ready to go. And obviously the breakup started to show up there. Didn't quite make much to the upside. Wait for the pullback again, and so on and so on. You've got to be able to recognize the obvious stuff, guys. These are obvious. These storylines should be crystal clear. If that moves that fast, there is a sizable commercial buyer behind you. Otherwise, how the hell did that happen? There's a sizable commercial buyer in this area, so your job should be to buy into these stories and take advantage of the obvious evidence that's presented for that massive trade, which ended up trading over $2,000 per contract higher following the toxic order flow read that you got on gold. Unbelievable. Unbelievable. There's the toxic seller coming in. You can see that the top edge, you can see the toxic seller coming in. It did follow through the bottom edge here, so you could obviously start looking at that as a possible sell trade there. There's another toxic seller came in just here. You can start looking at that and saying, right, well, there's my structure, there's my ideas. So you could start looking at springs, for example, here to keep selling into that toxic order flow. And you can see how easy it is to start recognizing, just by recognizing the fast, slow concept of trading. If you can put yourself into the fast, slow concept of trading, trading becomes very, very easy to recognize in terms of order flow. That's just the basic floor traders techniques of the marketplace. You can see how fast the market maker pulls away some liquidity. You can take advantage of that information. Well, not really the same, but in other words, toxic order flow will always create an RGL, but not all not all RGLs are toxic order flow. Um, you know, put it this way: if I've got toxic order flow that's bullish, it's going to create an RGL at that price, isn't it? But it's an RGL could also just be a buy side, sell side level off of sentiment. It doesn't have to have any toxic order flow.